Welcome to CNN Vantage Point. I'm Jay Over, investment strategist with CNN Wealth Management, and today's podcast will provide a market review for the month of May 2026 and our current outlook. Financial markets in May were defined by tension between continued equity strength and rising macroeconomic risk. Major U.S. indices hovered near or reached record highs, supported by solid corporate earnings, particularly in technology and AI-driven sectors, and resilient economic activity. However, market leadership remained narrow and valuations elevated. Volatility picked up mid-month as investors weighed higher bond yields and shifting Federal Reserve expectations. The consensus is moving toward a prolonged, higher for longer interest rate environment as inflationary pressures challenge the Fed's price stability mandate. April's Consumer Price Index report showed headline inflation rising 3.8% year over year, the largest annual price increase since mid-2023. The last FOMC meeting saw no changes to the Fed funds rate, but three governors dissented against language in the Fed policy statement that supported a bias towards easing monetary policy. In other Fed news, Jay Powell ended his term as Fed chair, and Kevin Warsh, a former Fed governor, was confirmed as the 17th chair of the Federal Reserve. Oil prices remain volatile as geopolitical tensions persist surrounding negotiations of a formal reopening of the Strait of Hormuz. Ultimately, oil prices closed lower, expressing optimism that some form of resolution will be reached to alleviate the oil supply bottleneck. Looking ahead, we are encouraged by rising earnings estimates, and we expect earnings will continue to support equity market performance. However, we acknowledge that building inflationary pressures may present a challenge. Consumer spending remains at healthy levels, but consumer sentiment is rapidly declining as concerns surrounding rising prices mount. Recent comments from Fed governors indicate inflationary pressures are becoming a greater risk than rising unemployment. The Fed funds futures market also sees a better chance of the Fed's next move being an interest rate hike. CNN made no portfolio changes last month and maintains a neutral allocation with a defensive tilt within major asset classes. We believe the balance of risk is skewed toward volatility, not a prolonged equity market drawdown. Modest weekly initial jobless claims and robust corporate spending further support risk assets. Rising interest rates have improved the appeal of fixed income, and we consider current yields attractive. We continue to actively monitor portfolio positioning and risk exposure, and we will adjust our neutral positioning if warranted. We'd like to remind our listeners that market conditions can change quickly. As circumstances and facts change, CNN's market views and portfolio positioning may change accordingly. If you would like more information about our current positioning and market thoughts, please contact any of our wealth management advisors. And if you like this podcast, we'd be grateful if you would share it with your friends. On behalf of the entire CNN Wealth Management team, we thank you for listening.
Please note, views are subject to change based on market conditions and other factors. These views should not be construed as recommendation for any specific security or sector. Client portfolios may or may not be at the positionings discussed due to, but not limited to, distributions, tax management limitations, systematic purchases, etc. Some products are not FDIC insured or guaranteed, not a deposit or other obligation of the bank, not guaranteed by the bank, and are subject to investment risk, including the possible loss of principal amount invested, and are not insured by any other federal government agency.